Hello, this is Wing Yi. Welcome back. And today I'm going to share with you this particular housing news. The title from Redfin I'm going to talk about is Housing Market Update Recovery Stalls, Mortgage Rates Jumped. Before I go over the Redfin report, let me quick segue into the mortgage news daily, which is a very the volatility, in my opinion, is just ongoing. As you can see, according to the mortgage news daily, as of 15 February, the 30-year fixed rate mortgage for people who have good credit has shot up to 6.8%. 2022, January, the mortgage rate were 4.12%. All of a sudden, the Federal Reserve tried to crash the housing market, started to increase their rates around the summertime, August timeframe, and then all hell broke loose. The mortgage rate started at 4% at the beginning of 2022, and from the summertime, June, July, August, shot up to the highest around October timeframe, right here to 7.37% around October the 20th. And as a result, then we have a massive pullback in demand. Home prices start dropping, then really paralyzed a lot of people. The interest rate continued to be elevated throughout the last quarter of 2022, around the high 6%. The last quarter, the winter time, which is due to seasonality, there are very little activities, which is understandable. And we're hoping at the beginning of 2023, we are hoping for some positive news. People have been staying on the sidelines for the past 9 months. We see light at the end of the tunnel when we see I want to pinpoint 5.99% mortgage rate drop on February the 2nd, couple of weeks ago. When this happened, I'm thinking, wow, we have reached the 6% psychological threshold, right? So this is a very emotional and psychological breakthrough to finally to see the 30-year fixed rate mortgage rate has falls below 6%, or it fell below from seven to the mid sevens a few months ago, October, to the mid sixes. Then the all the optimism begin to happen. People just really, whenever there's at the beginning of any year, people are very optimistic. They want to, it's a prime buying season for real estate on historical basis, as we all know. And then we see is 5.99% mortgage rate. And then it creates optimism, a lot of positivity. And we have seen mortgage loan applications start to ramp up. We have seen demand. We see a lot of activities with people getting off the sideline. So where's to go? Look at this. In just mere 2 weeks, the mortgage rate has skyrocketed back all the way to currently 6.8%. I don't know. I think this is, we are very, in a way, yes, a little bit depressing, but it is what it is. We have to understand what's going on. Let's look at the Mortgage Bankers Association on their article dated 15 February 2023. Mortgage applications increased in latest MBA weekly survey. And you can see here, it says right here, the mortgage application has decreased 7.7% from their market composite index, a measure of mortgage loan application volume, has decreased 7.7%. That mortgage rates increased across the board last week. After 5 straight weeks of decreases, the 30-year fixed rate increased by 21 basis points to 6.39%, which is 6.8% now as we speak. Today, 18 February, Joe Kahn said that, the NBA vice president and deputy chief economist. He go on to say mortgage application decreased for the second time in 3 weeks because of these higher rates. Refinance borrowers, both rate term and cash out, remain on the sidelines as current rates provide little financial incentive to act. And added him, purchase application dropped to their lowest level since the beginning of this year and were more than 40% lower than a year ago. So potential buyers remain quite sensitive to the current level of mortgage rates, which are more than 2 percentage points above last year's levels and have significantly reduced buyers' purchasing power. there you go. That's what's happening. We will finish up with this Redfin report. So how the market update, recovery stalls as mortgage rates jump. So let's go over the highlight of this report. Some home buyers are retreating back to the sidelines as mortgage rates has sent towards 7% all over again. Redfin Buyer Home Demand Index, which is a measure of requests for tours and other services from Redfin agents, fell 1% from a week ago, the first decline after a month of increases, and mortgage purchase application had dropped 6% per MBA Mortgage Bankers Association, which I alluded to a moment ago. It further goes on to say persistently low inventory is also contributing to the slump in demand. Low inventory. We'll cover more about that momentarily. As prospective sellers are also sensitive to rate hikes. 85% of mortgage holders have a rate far below 6%. Many of them are eager to hold on to it. The buck in mortgage rates is largely due to the week's inflation report, which was full of mixed signals. Inflation ever so slightly in January 2023, but the overall price of goods and services is still much higher than a year ago, and the pace of economic recovery has slowed. What's so funny? When the job report are very positive, for example, the recent job report has shown the unemployment rate is about 3.5%, which is like a 50-year low in unemployment rate. We're seeing robust job market and what have you. It's very counterintuitive. Whenever the economy grows and the job market is very positive, the Federal Reserve need to fight the inflation, the rising inflation. So they raise their rates. And I'm not saying raising the Fed rates equal raising the mortgage rate, because the mortgage rate is based on the 10-year Treasury index. Needless to say, it's very hard for consumers like us to have a gauge of what's going on, the pulse, because it's counterintuitive. Better economy, better job report equals higher, potentially higher mortgage rates until inflation has subsided. And evidently, the inflation on this current report have not subsided enough for the mortgage rates to come down. So it is what it is. So let's continue with this Redfin report. The somewhat disappointing inflation numbers put a wet blanket on home buyers after sub 6% rates. It is a fire under them a few weeks ago, said Redfin economist research lead Chen Zhao. He said inflation is cooling too slowly and the job market and retail sales are too strong. Go figure, by for the Fed to ease up on interest rate hikes, which means mortgage rates are unlikely to fall much in the next few months. Mortgage rates are unlikely to fall in the next few months. That means right now, February, March, April, May, the next few months, the first quarter, and maybe into the second quarter. Realistically, all of us, home buyers, home sellers, be prepared to bear this volatility. So you all individually have to make a decision, buyers and sellers, to determine based on the elevated mortgage rate around mid sixes and close to 7% in the next few months, what kind of decision you have to make to pull the trigger or still sitting on the sideline. To that end, these all is an individual situation. I'm not saying everybody should jump in to buy, everybody should sit on the sidelines. It's a very individual decision. You have to determine your own goals, long-term or short-term goals, and decide accordingly. All right. Right. So that's what's happening. And let's continue with the Redfin report. Inflation is cooling too slowly, said Chen Zhao, the Redfin economist. And also, however, even though inflation is cooling too slowly and job market and retail sales are too strong for the Fed to ease up on interest rate hikes, which means mortgage rate will be elevated for the next ones. Like I said, that doesn't erase the progress we have made. And it doesn't mean rates will soar past 7% either. Some of your naysayers out there, some of your doom and gloom people, you have your own opinions. You think the mortgage rate can increase beyond 7%. the chances of that happening is highly unlikely, in my opinion. You have to temper down your emotions a little bit. If a mortgage rate increases 7% and beyond, we can see some catastrophic events going on in the housing market. So I don't believe that's going to happen. That's just my opinion. Getting back to this, with a reminder that the housing market recovery will remain touch and go until we see inflation and the overall economy improve for the longer duration. So, a strong demand for move-in ready, well-priced homes in desirable neighborhoods. It's all come down to if a seller just put their homes, list their price at a reasonable amount, and they fix up the property and they said they are listed at a very good price in a good location, it will sell fairly quickly. As a matter of fact, I could personally vouch for something. Homes that are priced well are still getting multiple offers. Let me give you an example. Of course, some of those of you who've been following my YouTube channel, I'm a real estate investor. I help hundreds of real estate investors to buy in many different markets for the past 20 years. Now, I live in Bay Area for a long time. Anyway, one of my friend, realtor agent, Tony, just a couple of days ago, he said a couple of his homes in Fremont, California, which is San Francisco Bay Area, were listed around 1.3 million. They have received several multiple offers. You could say some bidding wars. The final sales price were about 5 to 10% sold above the list. So we are seeing in the pockets of different neighborhood in the country, we are seeing some element of bidding war, some element of housing offers, but it's not anything crazy like back in 2021 when we have seen astronomical overbidding and massive amount of multiple offers back in 2021. So that's not going to happen. And some of my Florida team that we promote in Florida investment homes, they're also telling me that there's a lot of activities in that part of the market in Southwest Florida. And even in Central Texas, we have a team there to help our investors to buy cash flow properties. They have seen a lot of activities for investors and primary home buyers alike. And they are seeing a little bit of a bidding war and multiple offers in those pockets. There's no such thing as a national housing market. I'm sure I would love to hear some of your comments below to see what's going on with your market. Is it getting multiple offers or is it prices are dropping? So share with me what's up in your market. I would love to hear from you and I will respond to your comments accordingly. Thank you. So let me see what else. Yep, just so you know, it's strange. It's a strange housing market. Take a step back from day to day. You have to maintain your emotional stability. I'm not saying you are acting irrationally. I'm not saying that, but take a step back from day to day, rate situations and consider their long-term needs. If someone is planning to stay in a home for many years, they can afford at today's interest rates. Now is a perfectly good time to buy because there's relatively little competition. Not only that, there's little competition. If you buy from new builders, they're providing you some amazing builder incentives. You're not likely to get, especially with the demand gets higher later this year, maybe. Right? So little competition. It's a little bit of a buyer's market, even though the, the inventory supply of homes is still very low on historical basis speaking. And I will cover a little bit more about that in momentarily. So getting back to the article. Okay, there's a silver lining. Okay, it's not all doom and gloom. Don't think short term all the time. Think about long term over time. So with that said, this sentence, this paragraph right here, it says rates will inevitably come down. We just don't know when. The term, I know this term has been overused recently. You you date the interest rate, but you marry the house. So what I'm saying is dating interest rate means at some point in time, even you close escrow at this elevated mortgage rate because you want to stay at your house for long term, you're okay with the budget. Later on, when and if the interest rate goes down in the next few years, you can always refinance, assuming you have good LTV, loan to value ratio of 70%, whatever, then you can refinance. If you have less equity than that, it would be much harder for you to refinance to a lower rate in the future. Does that make sense? So anyway, the leading indicators of a home buying activity, these kind of data I'm sharing with you are really no different in the past few months. Mortgage purchase application during the week ending February 10th has declined, obviously, for the reasons I just stated. I declined 6%. And just, I don't want to spend too much time remaining. So let me go through the graph for the sake of brevity. Median price, so the, the red line signifies 2022, the orange line 2023, the blue line is 2021, and the gray line is 2020. So sales price, at least year over year, we have received like a mere 1% gain year over year, even though at the peak last year, the price were pretty elevated, almost around $400,000 median price in the middle of last year, but has really tumbled down pretty significantly over the past several months because of the demand, lower demand, and the higher interest rate. But the first few months of this year, according to the orange line, is still 1% year over year. So kind of a similar, whenever we have the first quarter of each year, you have always see higher activity. So it's trending moderately a little bit. So it's kind of going up a little bit, but not that much, relatively speaking. But you can see the huge gap of home price increases in the past 2.5 years, which is amazing, right? You look at the median price back in 2020, is only like 275,000. Now at the peak last summer, is way up to 400K. Now back to around 346,000 February of 2023. All right. So median asking price, they're pretty much similar. Okay. 375,000. And the spring season is always a lot of activity. We have more sales than the rest of the year. So these trends are pretty normal. However, as you can see right here, you need, because the rate, which is higher than 6.22, is 6.8% now. So you need more than $2,400 average a mortgage payment to buy a median price of a home currently February 2023. And let me see what else. Pending sales is minus 18% year over year, which is pretty, given that the many homeowners or sellers they're not willing to get rid of their historically low mortgage rate. So not very, there are very, very few homes out there. That's the bottom line. And builders, right? Their confidence level, the new builders, their confidence level are also has been decreasing because new construction, new builders they are interest rate sensitive also. So as a result, the past 9 months of higher interest rate, they have decreased their construction activities. They have decreased their ability to obtain new permits to build new homes. What we're seeing with homeowners, they lock into their rate. They have very little motivation to move up from 3.5% to almost 7%. You crazy. If I'm a homeowner, which I am, homeowners, I'm gonna keep my mortgage unless the mortgage rate comes down to maybe 5%. Maybe I consider to sell one of my houses. Anyway, so what's happening? Lock-in effect, right? And let me see. So pending sales has decreased 18% year over year from 2022 to 2021, which is demand, the affordability factor as well. A lot of people sitting on the sideline. So we have this neutral, not enough homes for sale and not enough people buying homes because of the elevated interest rate and the home affordability issues. So it's a very strange market. New listings, same thing, right? New listings have decreased substantially in the past 6 months of last year. And although new listings is popping up a little bit, just like any other year during the springtime, but still almost 17% less new listings year over year from 2022 and partially 2023 from the past 12 months. Same thing with active listings. We have seen some elevated active listings before the summertime last year, but then slowly have subsided for the end of 2022 to a point where right now the active listings are still fairly similar to the 2021 level, although 22% more active listings in 2023 than from 2022, but still not enough supply. We speak of the supply, economics 101, the healthy market, a balanced market is around 5 to 6 months. Okay. It's 5 to 6 months of available inventory. We are now nationwide, although the neighborhood is different. Right now we have 4.1%. So we're a little bit below the healthy market. Still technically a seller's market at 4.1 level of inventory. So compare that to 2020, the month of supply inventory at that time we're at 4.5%. Look at 2021, right? The unique anomaly year. In 2021, in February of 2021, we have only a little bit more than 2.5% month of inventory. And then, of course, in 2022, we have a little bit more than 2 months inventory. So right now, we have 4.1 months of inventory, which is almost 2 months inventory higher year over year from 2022. But still, 4.1% is still technically a seller's market, still technically demand somewhat exceed supply. Okay, does that make sense? So pending sales, similarly, right? And we have the last 6 to 9 months, pending sales has decreased substantially. Now it's picking up because of the beginning of the year, as always, seasonality situation. Conclude quickly, medium homes are taking 51 days to sell, but it's higher than, of course, than 2022 and 2021, substantially higher. But on a historical basis, 51 days are pretty normal if you compare to pre-pandemic levels. 20% of homes sold above list price. This means 1 out of 4 homes are sold above the list price, and the other 80% of homes are sold below the final list price. I think that's pretty much it I need to say as I conclude this. So my takeaway, I know you guys are asking for. Toward the end, I always have my personal opinion based on my 30 years of real estate investing experience. And also because as an investor, I guide many mom and pop real estate investors to buy in the prudent markets, countries so they can cash flow properties. So I guide hundreds of real estate investors to buy cash flow homes in very good markets. So my takeaway, and primary homeowners, same thing. Again, if I'm not here to say everybody should stay on the sideline, nothing like that, but 6 to 6.5% mortgage interest rate, there are still a lot of buyers out there that they're still going to buy no matter what, because they are ready, they are motivated, they have the money, they have the budget, they have a long-term investment horizon, 7 to 10 years or longer. Whether you're risk investors or primary home buyers, it's all about your building a foundation. I mean, in my mind, being a homeowner is much better than being a renter. Okay, that's without a doubt. So the American dream is still very much alive, regardless of this economic and housing volatility. Again, if you have a stable job, if you can afford it, you make a down payment, you have a cash reserve, and you have a long-term investment horizon, who's to say you shouldn't buy your home? So every market is different. I know I've given you national figures. There's no such thing as a national market. Real estate is hyper local. Every block, every street, every region, every city is very different. Know your market, do your research, surrounding yourself with a good team, a credible team of realtors and what have you. And So do what you have to do. Don't let this short-term volatility, whatever, recession or job situation, economy, or housing market crash, which is not going to happen, by the way, in my humble opinion. But anyway, thank you for watching. And if you receive value from this video, please smash the like button and subscribe to my YouTube channel. And I talked about the general housing market for this video, and I also talked about real estate investing news. So if you want to learn more about real estate investing, you want to become an investor, then you please the link below on my website. Um, Input your email on there. You can become a free member of our real estate investing community, the Real Estate Network. So you'll receive free weekly real estate investment information into your email inbox, real actionable items. So you could create generational wealth with real estate investing. Thank you so much for watching, and I will see you on the next video very soon. This is Steven Yi. Have a nice day. Bye bye.